Hello, this is Greg Burton, your Spokane mortgage strategist. It is February 14th, Valentine's Day. Happy Valentine's Day. Okay, look back at mortgage bonds and mortgage rates last week. I look forward to this week. Last week, we saw mortgage bonds actually have a couple days of gains, which means that it improves rates. Friday, we did end up with mortgage bonds higher, which did improve rates a little Friday and into today. So when I say improve, we're talking about maybe an eighth percent in rates. We're still right at 5, kind of hovering between 5 and an eighth. The overall trend, though, still is down. Those gains on Friday are probably not going to hold. A lot of that was due to Egypt, and that is not going to continue to improve mortgage bonds and rates. So the continued trend is better economic reports and steadily climbing rates. Probably very slow, but steadily climbing rates. Probably the biggest news last week was the Obama administration released a report to Congress on proposals of winding down Fannie Mae and Freddie Mac, the government entities that keep banks full of mortgage money. And while many people have wanted this for a long time, this will raise rates because Fannie and Freddie are backed by the U.S. government and the taxpayer, and basically investors know there's no way it's going to default. They have a blank checkbook to keep paying on these mortgage-backed securities they're selling. So it's considered one of the lowest risk investments in the world. And investors, of course, like low risk. It has low return, but it has very, very low risk. And foreign investors in particular really like those bonds. You take Fannie and Freddie out of the picture and make it all private money, and those investors are going to demand higher rates of return, higher yields because of this increased risk, and that's going to be a direct correlation to higher rates. So this is, if this happens at all, it's going to take years. They're not going to just shut them down overnight, but if they do wind them down, look for rates to start increasing at a more rapid pace. And so if you're thinking refi, buying, now is the time before this stuff happens. Rates are still really good, and you can save yourself a lot of money. So that's about it for this week. I will, the more reports on the way this week, of course. We'll see how the week ends up. But right now, still hovering in the low 5% range for 30-year fixed rate mortgages. So we will see you next week. Have a great week.